Hello, I am Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. Normally I would be putting out a short on today's market outlook, but the market has changed so much over the last 24 to 48 hours that I wanted to cover a much more in-depth outlook. The entire market has literally shifted in terms of support and resistance, and where it was previously within frequency analysis to the point that we are reaching lower lows. And that continuation has a significant impact on the overall market outlook. As we can see from today's candle, it is bearish with a strong wick on it where the bulls tried to push the price action upwards. But the bears are still holding a very strong grip. And we are very much still within the 8th week of a straight bearish trend. But there is more to this than meets the eye, which is why you always want to look at your charts on a wide range of time frames. If we go to the monthly chart, you can see that we are actually in a much larger range that has been holding pretty consistently for the last 6 to 8 months. And it looks like this is either going to be a tipping point where we might break that cycle, or a continuation where it's going to continue for at least another month or two. Looking at the order book on the screen though, I would suggest that we are likely to see this ranging continuation a little longer. The congestion within the order book is pretty well centralized. I draw that analysis based upon where the bulk of the orders are in relation to price action, and as you can see, this area here, while there are a few outliers at lower points, I don't believe there's enough of a interest point or enough traction to really drive the price below those boundaries. For example, if we line up the order book with the actual candles, you can get a sense of where the balance is for the volume of trading activity. Subsequently, I think we are going to remain within the consistent zone that we are in, and the market is going to continue to range. I don't necessarily see at this point evidence that the market is likely to trend down below these two candles here. And that seems to be supported by the order book weight as well. Of course, the markets are unpredictable and extremely fluid, so there is never a guarantee that it won't just go completely off the scale. And we can actually take and look at other assets that are either correlated or inversely correlated with Euro USD to draw an assessment of just how that impact is likely to go. So let's actually start looking at some of the other details. We are looking at Euro GBP right now, and as you can see, it correlates well in the response to Euro USD. In other words, with Euro USD's market being bearish today, the GBP market is bullish today. So it seems to align specifically with the intentions of the direction. But we do see that there is a much deeper strength within the order book on the GBP side of the market. So that could suggest that Euro USD may indeed drop further, because there isn't as much bullish support. But finally, if we look at the most inverse correlated pair that has a direct relationship to Euro USD, and that is the USD Canadian, we can get a very clear sense of where this range is with respect to order book pricing, volume, and liquidity. And as you can see, the insane number of orders I already have in this particular market. And that ranges quite in depth within line of what the order book represents. So I think the Euro USD market does have room to drop further based upon what I am seeing within the order books of different assets that work well and pair well with Euro USD. But I don't think it's going to necessarily break out of its larger range. I think that's going to be particularly reinforced over at least the next couple of weeks, perhaps a month. We may end up even seeing the winter pretty stable in terms of just how well this market is going to continue to range with the current economic news, situations, and outlooks. So it's really pretty straightforward in terms of what to expect with the Euro USD. I think the outlook could potentially drop to the lower levels of the order book, but I don't believe the outlook is going to really indicate that we are going to fall too far past that. I don't think there is enough strength in the market to support a price much lower than that, let alone a price down to these levels. And if we go down to the weekly or to the daily charts, I think you will see through looking at the market where price has been versus where it is now that it is clear that the order book has pretty much been a very good indicator on what to expect out of price margin movement. Looking at the weekly chart, we can see that there is indeed room for a slightly longer downplay, but we do have support levels that have clear definition, and we are on a very strong one right now. I believe it's going to hold to some degree, at least for the next few days, as I really don't believe the market has the momentum to drive price too much further. Now, of course, that is contextual based upon news and events within the world economies, but I think we have a clear and concise viewpoint of what to expect. Using the daily chart for further confluence, we can see clearly where the market does indeed show some room, but it also shows that very aggressive support level. And I think that is going to be the point that we need to really pay attention to. I don't believe that support level is going to be broken, but I do believe it is going to be tested quite aggressively. So if you do use support as a stop loss, be sure to give it some breathing space, because I think it's going to be pushed against quite frequently with a few strong wicks going well below it. Now let's look at the actual order book numerically, and we can get a clear sense of just how much the market has moved on the basis of where price has been over the last month. And we can see that price has not been here in 30 days. So that's quite a significant move compared to where it was 48 hours ago. We can also see clearly where price has been repeatedly and aggressively. And if we take this picture and scale out a little bit more, we'll get a bit of a different outlook that gives a better perspective of the range. And so now you can see we have some very clearly defined areas where price has consolidated quite aggressively. And we see the frequency count and the weighting. We also see the count and the weighting on other areas, but where volume plays a major factor in the overall weight of the order book. That is, we can see numerically where support and resistance is based upon weight. And you can see that support really isn't that strong. We're in really untested areas. So anything that does rely on support for a stop loss should be considered a very cautious approach, because we are at the bottom of that boundary on a bigger picture. And this particular picture is using 3 positions behind the decimal versus the standard 4. So basically, it's looking at a much wider range in terms of where the market depth is to help isolate where the market could potentially move. And it does suggest, because we are right here at the bid-ask boundary, that the market is going to move lower. And by looking at order book weight, we can clearly see a lot of interest in this particular area where price might actually be pushed down into. But through looking and remembering the order book, this is well within the range of expected possibilities that the larger picture shows. So you really should consider this point very carefully when you're placing your stop loss. You'll want to go down such that your stop loss areas are very minimal. For example, this would be a good area because it's so little, and even better would be some of these lower level areas like right here, where there is very little interest in the market. You want to avoid any area that has this type of an interest, because this area will be tested with a wick. It's pretty much guaranteed. And it's not really that much of a distance in terms of what you would expect. So for your stop loss, think wide and think loose for at least the next few days, if not the rest of the week or longer. Keep a watch on your numbers and expect more instability and unpredictability in the market. Finishing up with the analysis, I think it's critical to pay attention to the longer term situations that exist on the daily, weekly, and monthly charts in terms of where price could potentially go. The market right now is in a good, healthy state for range trading, but you need to be careful and observant not to hit a breakout unless you have a breakout strategy ready. Please like this video if you found this information useful. Please leave me a comment in terms of what you think the market is going to do. I'm interested in different perspectives, considering just how unstable this market really is in the bigger picture of the current news events. Thank you for watching, and until next time.